So the president has gotten one issue behind him, at least for now, temporarily, and that's the immigrant issue. But he still faces the simmering trade disputes on many levels, but perhaps the most important being the one with China. And China apparently is going to stop buying U.S. oil. U.S. oil prices, though, today closed nearly 2% higher. But even with today's gain, crude has been hovering around the mid-60s per barrel level for the past 3 weeks. Right now, we're at $65.60. We're on the August contract, which flipped over today, but that all may change on Friday. These numbers might not mean anything because Friday is when the oil ministers from around the globe gather for the highly anticipated OPEC meeting in Vienna. They're expected to outline a scenario where the group will agree to raise output after more than a year of cutting it in order to stabilize what were falling prices. We're already seeing a tug of war in advance of Friday, though. Iran jumping the gun, signaling a small increase in oil output. Saudi Arabia, though, is verbally pushing for a bigger hike in production. All this as that trade dispute with China could leave U.S. energy producers left holding a little bit lighter or empty bag. Jerry Bailey is the former Exxon Arabian Gulf president, so he's very familiar with the minister's thinking. Jerry, first, give us your best guess as to what OPEC and Russia decide on Friday.
Well, first of all, Liz, thank you for having me on. And of course, it's my opinion, but I'm more of the position that I think that they will continue to hold the level of production as where we are.
Really?
Yes. Well, because if an increase in production would just tend to drive the prices down. And I do not think that OPEC nor Saudi Arabia, who really is the controlling factor here, really wants to see it go back down. In fact, I really believe that $65 is the low side, that we could see mid-70s still ahead of us, because they may have to have some production to make up for the unrest in Venezuela and the Iranian sanctions that are ahead of us, as well as the effect in China. But I do not forecast, in my view, that there would be an increase.
Well, let's say, let's flip over to the China situation.
Right.
This has become quite a dramatically valuable, I hesitate to call it a cottage industry for oil producers here in the U.S. They've been selling $1 billion per month of oil to China. If China stops buying the United States oil, who gets to win that? And a lot of people are saying Iran would happily step up, and just to annoy the U.S., knowing how the U.S. is slapping sanctions once again back on Iran, China would gladly turn to Iran and say, you know what, we'll buy your oil instead.
Well, I think that your points are correct there, but I'm not sure in reality it'll play out quite that way, because still China has to import half of all the oil that they use. And we're a big part of that. We supply mainly to Canada, to Mexico, and to China. And that need would be hard to be filled by some other sources. Now, perhaps, as you say, they could get something from Russia and possibly from Iran. But again, China is trying to walk a fine line with the United States as it is, and I do not think they would want to press their own situation there and cause too much trouble.
Well, speaking of fine lines, you can bet that there are thousands of U.S. companies, many of them oil companies, who are rushing across a line to try to get to commerce and file for waivers to be exempt from the Chinese tariffs. We got a new number, 21,000 applications for waivers to say, you know what, you won't be held to the Chinese tariffs, have been filed for Commerce, and we're waiting on Commerce. In fact, Fox Business had learned yesterday that Commerce could put out a list of companies that have been granted waivers, and already, as I understand it, there are 3 oil companies, and we could put those up there, but among them you have Hess, you have Kinder Morgan, you've got a company called Pipeline Plain, and they are all applying and asking for a waiver from this. Do you expect that ExxonMobil has already applied for a waiver from the Chinese tariffs?
Well, even though I'm a former Exxon executive, I don't have that inside information, so I don't know. But I do know that China is a large oil market. They need the oil. American goods and materials are the primary supply for doing that oil work in China. So there has to be some agreement and some calming of the waters, as we would say in that respect.
Sure.
You see, the problem, oil is not just oil. You know, it has so many different characteristics. There's heavier oils, you know, higher viscosities, lower gravities, lower sulfur contents. So we need from all the different locations, and China needs this supply because so much of their pollution problem is only going to be abated by using lower sulfur-containing oils.
The quality oil that we produce.
That's right,
Yeah.
which is what we produce. You're right, Liz. And so, you know, when I say it's a fine line of trying to appease all the players, but they need that West Texas oil, for instance, it's really pouring out, that's lower in sulfur content. And same thing, you know, my job right now, I'm president of Petrotech Energy, and we produce a heavier oil out of the Utah oil sands. We're contributing to trying to balance some of that lighter oil because refiners worldwide, including China, everywhere, U.S., need a balanced you know, oil supply that has heavy oil, light oils to make their range of products.
Well, as you extract and filter the oil from the tar sands in Utah, just remember, you can always come on Fox Business because you're straight up, you're honest, and I appreciate you coming on to give us your perspective. You've been in business more than 50 years. I love it. Thanks, Jerry.
Hey, look, I'm just a Texas oil man, and I appreciate you having me on.
Anytime.
All right. Thank you, Liz.
Anytime. Jerry, we appreciate it. Jerry
Thank
Bailey.
you.